in the U.S. and then hang it up in the garage and never ride the darn thing one day, it counts $1,000 in the GDP. And here, you'd look at new bicycles in the Netherlands and say, man, this country must be kind of bicycle poor because it's not producing that many bicycles. That 1951 bike is still on the road every single day, and all it counted for in the GDP was a little bit of grease and maybe a few new tires and a few new spokes, etc. So why can't economics actually count the real services provided by goods and services instead of these are the questions. These questions that are being raised here are a lot more fundamental than just ecosystem services. Okay? And think about, I love also the debate, and of course we do benefit transfer, etc. We call it an appraisal and calculate these numbers. And I love it when people go, those numbers, they're too wide, I don't like the shaky numbers, etc. And then I think about the bank that arose from Seattle, Washington Mutual, 6th largest bank in the country, valued at $306 billion in January 2008, sold for $1.6 billion by October. Or Lehman Brothers, $650 billion worth of value at the beginning of the year, zilch. Nobody even bought it for $1 by October. Totally bust. That's kind of a wide range, Not even $1 to $650 billion? Yeah. Geez. And we're complaining about $10 to maybe $10,000. So there are a lot of different things. In fact, these shoes I looked at, checked them out on sale. There, the day before the sale, it was $130. I bought them for $19. So the fact that economic assets go up and down in value, well, that's life, So I want to think about also why was, for instance, the New Deal and the post-war period in World War II, why were those such important periods? Why did policies change so dramatically? Why did we get new economies out of that? Well, one, they solved problems. They solved real problems. Two, they shifted finance on a major scale. And they were looking at solutions at the scale of the problem. So we have microeconomics. We have macroeconomics. We have no global economics. It doesn't exist. Macroeconomics is what determines policy in every nation, sadly, except for some real losers like North Korea or Zimbabwe. And we have and that's why we title our group Earth Economics. And it's in Earth Economics or a global economics that must be grounded in the natural sciences and these measures. It's absolutely the physical stocks and flows must connect with financial stocks and flows and the allocation of resources. As much as so now I'm going to talk just about a few game changers, what I consider to be absolute game changers in ecosystem services. So again, we cannot sort of have, just as the economy of the 19th century could not function by the 20th century. At one point, hunting and gathering at the scale of human populations didn't work. And without agriculture, we'd have maybe there was a big die-off, I don't know. But, human economies must change. And we are facing that now with peak oil, with depletion of water, etc. So how do we, as practitioners in ecosystem services, implement some real game changers in this economy? Well, I'll throw a couple out here to begin with. One of the policies which we could adopt from the New Deal was, there was all this speculation. And I would define speculation as when investment goes out not to produce a single good or service, but just to redistribute wealth. An example of that is currency trading, arbitrage. If I'm doing currency trading, I'm not producing any good or service, but I may skim a bit of value off of the euro or off of the yen or the dollar or other currencies, right? Well, one central policy is we need to clamp down and regulate and end speculation because it doesn't produce goods and it produces very perverse results, economic collapse and damage to ecosystems. So a very simple transactions tax on stock trading, on currency trading, financial transactions would easily crowd about $3 trillion that are traded alone in the currency market today. Every day, $3 trillion are devoted to trying to skim a little money off of other people. What if the $1 trillion were devoted to ecosystem services in our research? We'd get a lot of mileage. So step one, chop off the bad speculation, which doesn't do any economy anywhere any good. And in fact, I was at the World Bank meetings last year, and they started considering these things. Two, let's think about accounting rules. We gave a little presentation on that. Seattle Public Utilities Seattle was declared the most unhealthy city in the United States by the New York Times in 1898 because they had cholera, they had typhoid, people died off, the whole downtown burned down, 65 acres because they didn't have enough water. So they set up a public utility. They got the whole watershed, the Seattle River watershed, and since then have produced water in great abundance and without a filtration plant because the forest filters it. What an investment. They would never have done it with our current accounting rules and economic analysis, because if you'd have done a present value calculation on that, forget it. But the goal of the city council was actually to provide water in perpetuity for virtually any population size of the city that would absolutely be disease-free. And they succeeded. How nice. It was a sustainability goal. It was not a maximize today's profits goal. And accounting-wise, though, they're in a mess, because the watershed produces the water, but on their balance sheet, the city is about $1.3 billion worth of assets, and the watershed is only worth anything for bare land and timber value. So they can take a bond out to build a $200 million filtration plant, which they don't need, but they can't take a $10 million bond out to get rid of roads, which count as an asset, because you're not investing in as an asset that's on the books. So changing accounting rules so that the value of ecosystem services and the benefits provided are actually recorded is critical to shifting financial mechanisms, because then utilities, for instance, can bond for this. So shifting financial mechanisms is absolutely crucial. Another thing, just changing appraisal rules. We're working with the Appraisal Institute on a project because you cannot, by law in the U.S. and many other places, include ecosystem services or benefits into land appraisal or building appraisals because they're not recognized as value. In fact, curiously, aesthetic value is. If you have a view property, that counts. That's an ecosystem service that you can count, and in fact you can be taxed on, and etc. So looking at appraisal and how to do that. Another changer we feel is, if you want to, we've talked about private industry just a little bit here, and really it's critically important to think about how private industry makes decisions. We've worked on a number of market campaigns, and whether you're a hedge fund or a real estate company or a bank, you have what I would call an investment model, sometimes called a pro forma. And so if you're going to build a new building, it's got all these little variables in it. You know, how much you're going to have to pay for stormwater, how much it's going to cost to build the thing, how much you're borrowing your money at, how much rent you expect, is this a Class A building, what the energy costs are. Taking policy to turn the knobs on each one of those pieces of the investment model that virtually every corporation uses, whatever their sector is, it's different, shifts investment directly from the damaging side of the balance sheet toward the sustainable side of the balance sheet. And I do agree very with the point made that, you know, we kind of need to re-examine the corporation also, because the corporation, I think, performed brilliantly in the 20th century. We're no longer short of asphalt and plastic toys. Companies built and made them, tons of it. We're now short of fish and trees and flood protection and these assets. And now these things are more valuable. Plastic toys and asphalt are less valuable. So we need to shift, the nature of the corporation. Take a look at that. And, that's been done previously, and so we shouldn't be too afraid of it, I think, currently. Also, changing cost-benefit analysis. We did a little briefing for President Obama's Council for Environmental Quality, because in the United States, if you're a federal agency, you must do cost-benefit analysis. And if you're the Army Corps of Engineers, if it doesn't add up to, the benefits don't outweigh the costs, then you can't build it, period. That's the rule. And of course, if you don't count the value of the wetlands for hurricane protection, you only count levees, you're not going to do too much restoration. You're going to be building levees all the time. And if you only count the fish plant on one side of the levee and you don't count the system that actually produced the fish on the other side of the levee, then you're not going to do any restoration there either. And so straightening out, even though these are the kind of nitty-gritty details that we do need to be somewhat involved in. And frankly, in our presentation, we said, okay, here are the things that you should change with benefit cost analysis. Here's how you could include ecosystem services. But then we stepped back and said, but you know what? In the 1950s, when benefit cost analysis was developed, we didn't say, oh, let's take something from the 1920s and try and make that work, something that's not working. In fact, right now, and this is exactly what we said, we can look at ecosystem services and the landscape. We can identify them. We can start valuing them. We can map them. We can model them. If you have spatial knowledge about where systems are producing benefits and costs and such, why would you use benefit cost analysis anyway? Maybe it's time to kind of get rid of that and think about a much more spatially specific and better system. Well, anyway, there was a lot of silence after that comment. And people said, well, that sounds good. Yeah, that's kind of a good idea. But, our mandate is to fix, make some changes to benefit cost analysis. But the important thing is that if the principles and guidelines were changed, then that changes benefit cost analysis for the Army Corps, for the EPA, for everything in even the National Health Institute. So we need to think about, in Europe and the U.S., what are these key levers? I'll just give a few more here. And for instance, we need a new jobs analysis. Employment is one of the most crucial things happening right now. Ecosystem services has a lot to say about employment. And if you look at the New Deal, part of what was totally forgotten about that in the U.S. is that the core job program of the New Deal was the CCC, the Conservation Corps, Civilian Conservation Corps, 3 million jobs. It was reconstruct rural America, save the soil. They planted 7 billion trees and just provided huge. And so FDR actually saw conservation with national parks and the whole picture as the core of rebuilding an economy. How have we forgotten that? And one of the amazing things is when Washington State gave a $200 million tax break to Boeing, what did Boeing do? Well, thanks. We'll move our headquarters to Chicago. Okay, thanks. We're developing joint ventures in China, and we're cutting 20,000 jobs here in Seattle. So, when you have any sort of tax policy to promote jobs, if it's conservation and restoration, guess what? It's in your neighborhood. It's staying there. It can't be exported. It can't be outsourced. On the other hand, if it's some other policy, money's fungible. Who knows where it goes? So we're looking at also, not just green jobs, like, you were planting trees, we're doing energy efficiency, but Boeing, for example, their plant is dependent on flood protection in natural systems. That literally, their assembly plants would be washed out with a large flood. And making the point that these jobs are natural systems dependent, even when it comes to manufacturing. We have to awaken our decision makers, otherwise they're going to blow it. So just to run quickly, budgets. Why is it that everyone is looking around saying, ecosystem service, more regulations, we got to cut those things, that's terrible, this is bad news, it's going to hurt the economy. This is crazy thinking and ridiculous economics. Just to give you a little bit of history, think about 1905. In 1905, in the U.S., we had these patent medicines. And I won't go into the whole history of them, but one of them, which was perfectly legal, had a neurotoxin, and it said it would cure any pain. Doesn't matter if it's a toothache, broken leg, whatever it is, and you'd slug down that neurotoxin, and literally, you'd be paralyzed, shaking, for a minute or two, and believe me, it knocked out all pain. Didn't matter what it was. It didn't cure anything, but it knocked you out. Few people were permanently paralyzed. And so what we decided, but good old Teddy Roosevelt said, you know what? The whole economic philosophy of buyer beware is a bunch of crap. Because buyer beware says the buyer has to search everything and know everything. What we need are some standards. If you don't say, if seller be honest is a better policy than buyer beware. And when you have seller be honest, you actually know if the medicine, does what it said it's going to do. And so the cheaters were knocked out of that, those that peddled heroin, etc., were knocked out, and at least some of them. And those medicines that actually performed something, continued. With ecosystem services, we're still in the patent medicine world. We actually, there's no telling what a corporate activity, the full damages and benefits will be. So we need life cycle analysis. We need ecosystem service analysis. This is science-based economics to communicate the full costs and benefits, just like regulating health products. We still have a lot to do on that side. So a few other things. Budgets. So we need to look again at budgets, redefine those. I won't go into that too much further. Standards, very crucial. Ecosystem services, I think, will change our societies dramatically because it deals with something very core, and that is property rights. And the way I talk about it is this refines property rights. Even poor Louisiana, a red and property rights state as you can find in the United States, came out in 4 Supreme Court cases and said, if it's restoration of the coastline and greater hurricane protection versus your property rights, guess what? Common property rights win, period. Do the restoration. And I think when we look at water supply, and I like Costa Rica's solution, said the state owns the rights for flood protection, clean water, etc. But if we wish to have a payment for ecosystem services and pay for different behaviors on property, we can do it. But you can also have the legislation. And so straight away, another one of our game changers is to know the difference, and I really appreciated that comment, between when you use markets and when you just bring the hammer down with legislation or banning or whatever. What if we had said to the economists, hey, you guys solved the problem of CFC depletion and ozone depletion. And then they got out the pen and go, okay, let's see if we can calculate the present value of costs of ozone layer depletion. It takes 30 years for CFCs to drift up to the ozone layer, kind of depreciated by that time. Well, forget it. We just had to say, look, ban CFCs, and that was the best decision. And so this is very important policy-wise to differentiate between when economics incentives need to be used to push things around here or there, or we get rather tough. And I think climate change is really the core issue. We cannot grapple with climate change without fundamentally changing our economies. These things cannot be done separately. And it brings up one of the last few issues here on this point that, well, I got a few more here of game changers. We have a structure which we inherited from the 1940s, really. We have 3 institutions in charge of global financial management: the World Bank, the IMF, and now the World Trade Organization, which was the GATT, Bretton Woods institutions. Then we have MEAs, multilateral environmental agreements, and some have performed well, like the International Whaling Commission and CITES, which were mentioned earlier today. But the Climate Convention cannot be a CITES. It cannot be an IW. And everyone in this room, I'm sure, completely understands this. It has to have a financing arm that is enormous. And one of my concerns is that we have to think very broadly about financing mechanisms. We didn't say in the United States or Europe, let's figure out how much those kids are going to gain from education. So we'll fund public schools by trying to tax, the increased benefits from education or whatever. We just said, okay, we'll use an income tax and we're going to pay for education. And maybe we need to tax transactions first, internet transactions tax on currency trading, etc., and put that into a climate fund and just get it going before, carbon markets are fully come to fruition. Because we really can't wait for too long, 10, 20 years on that. So we also need new institutions, and that's been covered in the conference. We've proposed a watershed investment utility. It's crazy. In our little area, we have one watershed. It has 150 tax districts. I mean, crazy. School districts, stormwater districts, flood districts, shellfish district, you name it. And you have infrastructure conflict. So 16 stormwater districts pour water into the river with pipes, building more pipes, get that water out of the city, and then the flood district is sitting there going, gee, every year we get, higher peak flows. We need to build these levees higher. Oh, they get washed out every year. And so we need institutions that are at the scale of the problem. So if you've got watershed scale problems, let's get to the solutions at the watershed level. Okay, well, that's pretty good for a set. Well, my last one is how we treat time. And, one day I was in the shower and kind of scrubbing around and put this shampoo on and started washing it, and I kind of went, why am I putting shampoo on the top of my head? I don't even have hair there anymore. I haven't had hair there for a long time. I need to kind of scrub on the side. This is crazy. This whole system, why am I doing this? And if you look at discount rates, it is gone bankrupt. So the Army Corps of Engineers used to say, well, we're going to peg the discount rate to the prime rate, what the government forces banks to pay. Well, of course, it went to 0.25%. And the Army Corps, kind of woke up and went, oh my God, we can't put if this is going to change everything if we put our discount, okay, we'll just keep it at 5%, 4.85%, And so we have a convention of treating time and benefits across time, which is fundamentally unsustainable. Every time we use a discount rate, what we do is pull as many benefits to the present as possible and push as many costs into the discounted future as possible. And on every level, that is unsustainable. And I know we can talk about all the arguments of the cost of money and et cetera, but the fact is that if we are talking about natural capital, natural assets that don't degrade, et cetera, we have got to fundamentally change the way governments, firms, and ourselves treat the future in discount rates. It's really, really crucial. Okay, well, go ahead and take another breath, deep breath, Maybe help yourself to all the oxygen you'd like. Maybe we should charge for that, don't you think? Global GDP would rise, right? If we charged for oxygen. We'd all be, well, some people couldn't afford it, but it's the same with food anyway. So, but, some ecosystem services must be free. We cannot do anything else. I'm going to wrap it up here because I realized I want to leave some time for questions. But we have to have a vision of the economy where biodiversity, oxygen, as Bob mentioned, sustainability has got to be our top economic criteria. If something's falling against that, then whether it's a firm or a household or anything, there needs to be either regulation or financial penalty against moving to the unsustainable side. And we have to think about these resources. We want water to be inexpensive. We do need food not to be too expensive. We need to correctly price it. Hazardous, toxic, pesticide-laden food needs to cost more. Organic food should cost less. So we need to change those aspects. So I'm going to conclude by saying, if you came to this conference thinking that your job was to value this ecosystem service or work on this case study, etc., well, it is. But your job description is expanded. Okay? And the real job description, I think, is for you to sit back and think about how your work fits into perhaps one or two of those game changers, real game changers. We all have the time, frankly, to go ahead and spend a little time on federal regulations, on benefit cost analysis or something else. And we need to spend that time on the game changers. That's what the New Deal, that's what happened after, in the Reconstruction period after World War II. People spent time on game changers like, let's get the tax structure straight, better, let's improve it. And we need to do that today. That group of people was very undervalued, I feel, in history. But so I want you to think about your expanded job description. What can you do to put a piece with the current work you're doing into a real game changer, to build a 21st century economy that is really sustainable. So, and also for last pitch, our book here, John de Graaf, who is of Dutch descent. His parents are from the Netherlands, and I co-wrote this book, What's the Economy For Anyway? It will come out on November 8th. You get a 40% discount if you order it now, on Amazon or whatever. But thank you very much. And yeah, and thanks. I wanted to thank Leon and Dolph and Sander and everyone who put this conference together, because I found it to be, we were taking some steps, but this was a big step up. This conference really covered a lot of tremendous areas. More people were here. It's been so exciting. So thank you very much.